You've probably heard of Aave, the largest decentralized finance DeFi project on the market today. But do you know what Aave is and how it works? Don't worry, you don't need to be a tech expert to understand it. So sit back and relax while we break it all down for you. What exactly is Aave? Aave is an open-source decentralized finance protocol that allows people to borrow and lend cryptocurrencies through non-custodial liquidity markets. Because Aave operates on blockchain networks, there is no centralized authority governing the network. Instead, Aave operates and governs the network through a decentralized autonomous organization, or DAO, made up of people who own and vote with Aave tokens. Aave is also unique in that it allows borrowers to get loans without having to provide any personal information, such as name, address, or social security number. In fact, Aave is a Finnish word that means ghost, hence the Aave ghost logo, which alludes to the anonymity of Aave transactions. So how was Aave born? Ethereum's smart contracts introduce new, unimaginable blockchain capabilities, ranging from blockchain-powered games to NFTs to decentralized finance, DeFi, and much more. Aave began as ETHLend, which was founded by Stani Kulachov in 2017 as a peer-to-peer, P2P decentralized lending protocol that connected borrowers to lenders via the Ethereum blockchain. The ETHLend protocol launched through an initial coin offering (ICO) that raised over $16.2 million in exchange for over 1 billion Aave tokens, then called Lend. However, a peer-to-peer, P2P model proved inefficient. This resulted in the rebranding of ETHLend to Aave in early 2020. In the rebrand, Aave implements a new model that is similar to a peer-to-lending pool-to-peer P2P model. Owners of Lend tokens had the option to exchange them for new Aave tokens at a 100-to-1 ratio. With the introduction of the new Aave tokens, you could have a say in the direction of the Aave network. Over time, Aave even expanded from the Ethereum network to other markets, such as Polygon, Phantom, Harmony, and Avalanche. How does Aave work? Aave works through lending pools, in which lenders deposit tokens into a lending pool containing the same type of cryptocurrency. So ETH owners will deposit into an ETH lending pool, while USDC owners will deposit into a USDC lending pool, and so on. Just like bank deposits, lenders, or depositors here, they will be able to earn interest. The same goes for borrowers, who can also borrow various assets at the cost of interest. The rate of lending or borrowing is usually reflected in an annualized figure called the annual percentage yield or annual percentage rate. When lenders deposit funds into a lending pool, the interest they earn accumulates in the form of A tokens, the letter A standing for Aave. A tokens are interest-bearing tokens native to the Aave protocol that are minted and burned upon the deposit and withdrawal of assets from lending pools. Each A token is pegged to the value of the corresponding cryptocurrency in the lending pool. So if you deposit funds into an ETH lending pool, you will receive a ETH in return, which will increase in amount as it passively accrues interest in your wallet. To borrow cryptocurrency, one must deposit tokens that are worth more than the amount you'd like to borrow. This is known as over-collateralization. Once done, borrowers can borrow up to a certain percentage of their collateral's value in dollars. The percentage is known as the collateral ratio, which is predetermined by the protocol or DAO. Riskier assets usually have a higher collateral ratio. Currently, there are over 30 Ethereum-based assets you can borrow on Aave. Borrowers must pay back the amount borrowed plus interest. The interest rate is determined by the supply and demand for the amount of cryptocurrency available in the lending pool. According to Aave, there is no set time limit for repaying a loan, so it's up to you when you want to pay off the loan. Whether or not you'll get liquidated depends on your borrow utilization. If it exceeds the collateral ratio, which can be due to a fall in your collateral value, an appreciation of your borrowed assets against your collateral, or even accrued interest, you can be liquidated. So pay attention to these numbers. All of these procedures are supported by smart contracts, which enable all Aave transactions to be executed automatically when preset conditions are met. Features of Aave. Now that we've seen what Aave is and how it works, let's look at some of Aave's features. Lending and pooled liquidity. The most notable feature of Aave is its lending and pooled liquidity model. Aave employs a peer-to-peer, P2P model, in which lenders deposit as many tokens as they want into a liquidity pool containing the same type of cryptocurrency. Borrowers then borrow funds from their chosen liquidity pool, for which they pay a variable interest rate for the duration of the loan. The interest earned is then divided among the lenders based on their respective contributions to the loan. Flash loans. Another feature that Aave possesses is flash loans. Aave's flash loans feature specially contributes to the project's popularity in the DeFi market space. These are uncollateralized loans of any amount that borrowers can obtain through the protocol. The main caveat is that a flash loan must be paid back within the same transaction block from which it was borrowed. Because flash loans occur over a short period of time, they are not recorded in a user's account balance. If you don't pay back before the transaction block is added to the blockchain, the flash loan will simply fail to go through. To take out flash loans in a single transaction, you must have a strong understanding of smart contracts. Its applications range from collateral swaps to arbitrages to yield farming for profit. Native tokenization. The third feature we are going to look at is native tokenization. Aave has a native token called Aave. Most of its use cases apply solely to the Aave protocol, such as voting rights, trading fee discounts, collateral discounts, higher loan amounts, and fee-free loans. Aave is known as a deflationary token because almost 80% of the Aave fees earned from the platform's transactions are burned. This way, the token supply is constantly decreasing, which could help increase the token value of the circulating supply. The Aave token is currently trading at $98 per one Aave, with a market capitalization of $1 billion and a circulating supply of 13 million tokens. V3 features. The most up-to-date Aave protocol is version 3, which adds new features and capabilities to the protocol. So far, 3 feature updates that stand out the most include portals. The term portals refers to cross-chain transactions. The portal feature aims to allow Aave tokens to be transferred from one blockchain to another. Next up is high efficiency mode, E mode. The E mode allows increased capital efficiency. Aave's goal is to increase the protocol's efficiency by enabling higher borrowing power. Aave v3 will allow borrowing of up to 98% of the collateral you provide, as long as the collateral token is the same as the tokens you'd like to borrow. Isolation mode. The third feature in Aave's version 3 is isolation mode. The isolation mode feature will allow Aave to add new tokens to their protocol while minimizing the risk posed to other tokens on the network. Ideally, isolation will mean that borrowers are restricted from borrowing other tokens on the protocol if the collateral they deposit is of the newly added token type. There are many more feature updates we can expect from Aave v3, such as gas optimization and Layer 2 designs, so keep an eye on Twitter and Aave.com to stay up to date. The future of Aave. Aave and the DeFi ecosystem in general have a long way to go. For a long time, the traditional finance sector has been at the forefront of lending financial assets for profit. However, it is clear that cryptocurrency is catching up, with more and more people signing up to DeFi projects every day. Additionally, Aave has consistently improved its services to provide the most efficient lending protocol for its users. Aave intends to launch its own over-collateralized stablecoin, GHO, in July 2022, with a 1-to-1 value pegged to the dollar. Moreover, there's also an affiliated game called Aave Gachi, which incorporates Aave's A tokens into its core gameplay mechanics, turning those little ghost NFTs into interest-bearing financial NFTs. Stani Kulachov, Aave's founder, has also grown his interest in launching the Lens protocol, a Polygon-based decentralized social networking platform. This new protocol will allow users to buy and sell their creative content as NFTs. It's tough to predict whether Aave will continue to increase in value in the coming years. As Aave competes with other high-performing DeFi projects, such as Compound, we can only advise you to always do your own research and invest only what you can afford to lose. And that wraps it up for what you should know about Aave. Remember to like, subscribe, and turn on notifications for future alpha. See ya!